If I could avoid a single stock, it would be the hottest stock in the hottest industry, the one that gets the most favorable publicity, the one that every investor hears about in the carpool or on the commuter train, and succumbing to the social pressure, often buys. Hot stocks can go up fast, usually out of sight of any of the known landmarks of value, but since there is nothing but hope and thin air to support them, they fall just as quickly. If you are not clever at selling hot stocks, you will soon see your profits turn into losses, because when the price falls, it is not going to fall slowly, nor is it likely to stop at the level where you jumped on. There has never been a hotter stock than Xerox in the 1960s. Copying was a fabulous industry, and Xerox has control of the entire process. To Xerox became a verb, which should have been a positive development. Many analysts thought so. They assumed that Xerox would keep growing to infinity when the stock was selling for $170 a share in 1972. By then, the Japanese got into it, IBM got into it, and Eastman Kodak got into it. Soon there were 20 firms that made nice dry copies, as opposed to the original wet ones. Xerox got frightened and bought some unrelated businesses it didn't know how to run, and the stock lost 84% of its value.